All right. Good evening once again. First, we're going to take a look at our market and sectoral indices. Weekly perspective as well as monthly perspective. That's not a bad idea. I'm going to change my Ikanashi charts to bar charts. It will give you a better perspective of the range, which Ikanashi may not. So what I'm going to do is the left hand side most chart, let me put it monthly. The middle one, let me put it weekly. And the right hand one, the rightmost one, daily. Okay. First and foremost, let's quickly take a look at what happened last week. Let's start a micro approach first, and then we go macro. So from a last week's perspective, it's still a very, very mixed up tail readings. What it means is few strong sectors have gone up, few weak sectors have stayed at the bottom end. Few of those weakening are still up there, those which are weakening. Those who are improving, like the Nifty, not exactly Nifty, consumer durables to be precise, is kind of a mixed up. It's not that all the strong sectors are gaining, all the weak sectors are falling, not necessarily that to be the case. Real estate bounces back with a 3% gain. Most of the sectoral indices did fairly okay. And it's media which was down heavily. Now media, real estate, if I just chuck out the bottom one and the top one, it actually doesn't matter too much to the Nifty. What matters, of course, is oil and gas. This is where your Reliance, ONGC, Maruti, M&M, Auto. So this is where the meat lies. However, the biggest chunk actually, it means biggest in terms of weightage, is down here. Bank Nifty very, very flat. So it looks predominantly bullish, real estate, oil and gas, auto, healthcare. But what I can take away from this table is these three. These three are the strongest sectors at the current juncture in terms of relative strength. The strong sectors have managed to give us some kind of a bounce back. Auto is holding well, healthcare has managed a bounce, and so has oil and gas. So that's a good sign, that's a good story. What is slightly worry is the one that matters. The Bank Nifty is down still here. It is, in terms of the RRG graphs quadrant readings, it is in the lagging quadrant. And so this pocket of the market needs to show strength, needs to show support if we want to see the Nifty back to an all-time high and sustain there without too much of volatility choppiness. The degree of choppiness and volatility that we have experienced recently and we are going through is not easy for short-term traders to extract money consistently week after week. So the takeaway is oil and gas, auto, healthcare still showing strength. The takeaway on the negative side is Bank Nifty is still lagging, so it needs to pick up. So that will be interesting. If I extend this 1 week to 4 weeks, I'm making the changes here. As you can see, now I've made it into 4 weeks. That's like a month. Media stays as the biggest losing sector, of course. And down over here, we have IT. IT had heavily sold off. And after that, you can see mid cap and small caps. The much needed correction, slowdown of the mid and small caps, the broader markets, has finally come last month over the last 4 to 5 weeks, which is a good sign. Auto has continued to show very good strength. This is, if I write down sector strongest, I would put auto first. Over a 4 week span of time, over a 1 week span of time, auto is been up there, both in terms of relative strength and gains. Consumer durables managed a decent bounce. Healthcare also doing fine. Fin. Now this is where we saw Bajaj Finance and last Thursday's move of Bajaj Finserv. It has picked up really well, but still it's in lagging with the Bank Nifty, with the FMCG. So FMCG definitely weak, but Bank Nifty can give us some move. But financials have kind of inched up a little bit. March end also meant an end to the quarter. So let's say 4 weeks in 3 months, around 12 to 13 weeks if we take it further. Now this is where I would like to read the flow of the sectors. This is interesting for me. For example, if I animate this, you will be able to see how the RRG graphs explain to us the way the sectoral rotation has been happening. If you do not know too much about these RRG graphs movement, just remember that on the top right, it's leading. Then when a stock or a sector starts to slow down, it loses vertically. Then it comes down to weakening. This is where it's weakening, not necessarily falling. It might be range bound, but it's not gaining either. Vis-a-vis some benchmark, I have put Senex 500. So this line coming down does not mean the sector is coming down. May or may not be. Okay. Then it goes to lagging. Sectoral strength is not there. Improving. And then of course leading. If you ask me, I personally prefer start to keep an eye on the sector which is downright up over here, which is completely lagging, and this is where your contrarian bottom picking can happen. This is a very sweet spot which is improving, and of course once it goes to the leading quadrant, that's your breakout counters, that's where strength lies. If someone uses it over experience, it tends to get better, but never use it standalone, always parallel side by side with the actual price chart. So 12 weeks, a quarter. So let's see, in terms of percentage, we see oil and gas, we see auto, we see the same names coming up. So pocket of strength over the last quarter has been the same, is also the same in a short-term time frame. Again, the same names, media, FMCG, Fin, Bank, Nifty. This needs to change big time. If you are predominantly a long-only trader, or your mindset is predominantly on the bullish side, this is where you need to focus, especially the Bank, Nifty and the financials, because of course we know that almost 40% weightage comes from there. If this continues to stay weak, then it's a matter of time. It will be difficult for the others, the standalone Reliance, the standalone L&T, Maruti, M&M, Tata Motors combined, will be difficult from the metals to hold on to it, right? If I take a look at the tails now, if I sort it by the tails, that is the quadrant wise, it's oil and gas. It's losing a bit vertically, which means it's slowing down a bit. Auto is showing exceptional angle. It's strong and it's gaining vertically as well as horizontally, which means that momentum of the strength as well as absolute strength is there. So is healthcare. So these are strong sectors. Within these three strong sectors, auto and healthcare stronger than oil and gas. Consumer durable struggling, but in the improving quadrant, so we can expect it to show more strength. Bullish. Realty, now you see what realty is doing. It has now entered the weakening quadrant. It can go up like this and this and this. It can do a lot of things, but eventually the movement will be clockwise. So realty is slowing down, so be very specific and careful about that. Small cap slowing down. Metal choppy, but as of now slowing down. IT, yes, slowing down. And now we enter the lagging quadrant, which is FMCG, the media, the finance and the Bank Nifty. As you can see, the finance and the Bank Nifty has just, inched up a little bit vertically. The momentum is just picking up. So it will be interesting to see whether it shows strength to improving and then leading or not. So with this thought process, with this reading, now what we can do is we can go to our sectoral charts, and quickly let's take a look at the Nifty first. On my left hand side is the monthly chart, which is a 2 month of decent gains. You can clearly see, or the candlesticks will show that doji spinning top kind of a like of behavior of price. So the choppiness is very, very relevant. The divergence continues. The momentum is still very much down. A slant within a slant is shaping up. These are not very great signs, to be precise. Now, one thing I feel good is last week's low, which was this low, was a crucial level for the bears or for weakness. Now, last week, the market did not even come close to this low. It showed really good strength. In fact, pretty strong strength on Thursday's trade and tried to close an all-time high. So I'm considering this as a sign of strength, but it did not sustain. It slipped also quite a bit. Many a times I've noticed when the market really wants to come down, it will show a 1 or 2 days of spurt move, break a previous high or a resistance. All the weak hands, all the shorts which are weak, closes their positions, and then it reverses. And when it reverses, the reversal is like super crazy and strong on the downside and vis-a-vis on the upside also. when I'm essentially talking about a bearish trap and a bullish trap. So by that logic, in terms of levels, by whatever reason, if next week you see a breach of last week's low, this week's low, this will be your first sign of caution. This is, if that happens, if this happens and you see prices breaking below last week's low, this is where you stop looking for longs. Clearly, you should definitely by this time will start to see some sectors or stocks slowing down and shorts might start to shape up. If you see by any chance a break of this, then this move that we saw on Thursday, this move down and slip, this was a trap. Then you're gone, then forget longs for a pretty decent amount of time, a quarter at least. But just preparing ourselves in terms of levels. That's on the downside. What about the upside? The upside is there, it's shaping up, but it's not easy because it's fairly choppy and sharp. I'm still concerned about this divergence. It has not led to a sell-off, which is a sign of strength, but it has also not led to a sustained breakout either. So if we want to talk about strength, the Nifty needs to break out to an all-time high and sustain, and of course then the momentum indicators pick up and all the rest of the story happens. If that has to happen, then your Bank Nifty has to fire. Let's take a look at the Bank Nifty. So the Bank Nifty is essentially, if you can see, I have a small little drawing on some kind of a symmetrical triangular behavior, like a pennant behavior right on the top. So range bound within the range of these 2 months. So it's contracting. I'm looking at this as a sign of strength as of now, because in an uptrend, when a stock contracts, it's a sign of slowdown. It should ideally break out. So if the index, if the Nifty breaks out, if the market goes to an all-time high, I'm quite certain it will come from this pocket, this breakout. So Bank Nifty trend and momentum are kind of not in sync in the weekly, not in sync in the monthly. It's picking up on the daily thanks to the financials movement that we saw in finance and Bajaj Finserv and a few other stocks. That's where you look for breakouts. That's where you look for signs of strength. Level, of course, will be the same. Last week's low, last week's low, and of course this particular breakout. So Bank Nifty will be the one to keep a close look at. Finance will give you a similar kind of a picture. In fact, finance is a tad better because of predominantly Bajaj Finance there. Now let's take a look at the rest of the sectors. Auto, one of the strongest in terms of the RRG graphs, and now you can see why CNX Auto came in all the RRG time frames that we changed. It was right on there, right up top. But we need to be little careful. Yet another divergence is shaping up. Last time we had some signs of divergence. There was just a slowdown. There was no correction. Let's see what happens. This is not the best of price and time to buy auto stocks. If you are long, you can look to trail your stop loss, go partial profit booking if needed. And let's see whether this slows down the index or not. My sense is it's possible. And the first sign of that possibility you will see if Friday's low is breached, which means this will turn out to be a breakout failure. How will this turn out to be a breakout failure? If next Monday or Tuesday, give it 2 to 3 days, not even 3 days, 2 days. If Friday's low is breached, auto is coming down. But it's a strong sector which is coming down, which is a much needed corrective move. Nothing to be too worried about. Energy also pretty strong, but this is very, very interesting. This is the weekly chart, which is giving us a bounce back. The momentum is still very much down. Last week's low put an alert for the energy. Go through all the energy constituents and see which stock has given you a formation like this, right? And you will definitely find 1 or 2 stocks which kind of mirrors this formation. Mark that particular stock's weekly low. If that weekly low is breached, that stock is going for an ABC kind of a correction. Bullish, but we need to be careful. Bearish if last week's low is broken. FMCG is a definite pocket of weakness. It has come off in the last 3 months, but it's at levels which can be interesting because it's testing erstwhile highs, which can play out as current lows. Too early to say. We don't have any particular good looking divergence or formation. There is a range bound activity which has seen some choppy behavior. Hindustan Unilever will be an interesting candidate to keep an eye. In fact, last week only, I'm not too sure, but I was talking with someone and I said that keep an eye on Hindustan Unilever for a prospective contrarian bounce back. So you can keep an eye on that counter. ITC, of course, there. The other pocket, which is definitely weak, has closed pretty weak on the weekly, weak on the daily, monthly. One of the biggest sell-off of around 7.5% is CNX IT. Now, this is little concerning because if you take a look at the monthly chart, it's a pretty wide range sell-off, close towards the lowest point of the bar. The previous structural highs is close to that 33,000 mark. We are at 34,890, around 35. So there is a good 2,000 points downside possibility, bare minimum, for the IT. So it's weak. It can give us the occasional short-term bounce backs. That's okay. But one should stay away from looking for trading longs in IT. Positional longs, adding to your long-term portfolio, no problem. Metal, choppy. By the very look of the weekly chart, we can clearly see how crazy it had come down and also bounced back. I can see slant divergences all over the place on the weekly chart. The monthly chart is pretty good. No problem, but it won't be easy to trade. Short-term traders will not find it easy because of the way recently it has fallen and of course the way recently it had managed to bounce back. View cautiously bullish. Below which level should we turn bearish? Last week's low. Why? Because of the existence of the slant, because of the fact that the stock, the sector, is still within the last 3 weeks range. So unless this range is taken out, it's not going to be an easy call amongst within the metals pack. Pharma, before we wrap this weekly analysis, Pharma is exactly what I shared with you in CNX Energy. Short-term 2-week bounce back after a fall and the momentum stays down. So any kind of a weakness will only come below last week's low, if at all. The monthly chart is exceptionally strong. So any kind of a fall is going to be a short-term one like this. Recently, Pharma gave you a breakout failure. I'm talking about this. This breakout failure, A, B, kind of a C, a complex correction on the downside. So we need to keep an eye on last week's low, same ways as CNX Energy. Go through the constituents of CNX Pharma, check the major ones, Sun Pharma, Dr. Reddy, Cipla, Lupin, Oro, and check which stock has given you a formation like this. And keep an eye on them. Cautiously bullish as long as last week's low hold. And finally, let's quickly take a look at the real estate. Now, real estate would give you a similar kind of a feeling which energy and just now Pharma gave you. 2-week bounce back. So 3 weeks back, there was a big sell-off. The momentum has not improved at all. Sharp bounce back. Cautiously bullish till the point last week's low hold. A big range expansion and an outside bar on the monthly chart. So I don't think the sector is going to run away from here on. I think the sector will find itself within a range, choppy, volatile. Trendiness will be back on the downside only if last week's low is broken in a hurry next week, or else you'll have some odd chances here and there. So if you ask me, the next trend on the upside can be from the financials and bank Nifty to support the Nifty to an all-time high. Having said that, for some reason, if we see some weakness coming back immediately Monday or Tuesday, then the first thing that it will strike me is Friday's move was kind of a trap. And if Friday's low is broken, if last week's low is broken, that will be the first sign where I will stop going long aggressively. In fact, this is not the market to go long aggressively at all, but that will be your sign of caution. So mark these levels, strategize yourself accordingly, go through those constituents, especially bank Nifty on the for bullish, FMCG for some contra trades. If you are into contrarian trading, keep an eye on auto, energy, keep an eye on few pharma names, and stay away from real estate, stay away from consumer durables. I think we've not looked at it, but it will give you a feeling like similar to that. So consumer durables, FMCG, you can wait, but these are the sectors from where we can get some movement. right? Let's move ahead. Let's now quickly take a look at our open positions which we have. Let's update them, and let's take a look at the questions which you have already posted in the chat.